Hey, it's Dan. Welcome to mid-December. I hope the ramp up to your holiday season, or perhaps you're in the midst of your holiday season, is going really well. And maybe you're looking forward to New Year's this year with a special sense of optimism for hopes of better things to come in 2021. I'm hoping to bring you a little bit of optimism while addressing perhaps a little bit of pessimism along the way. I've gotten a lot of questions lately as to whether or not our real estate market is headed for another foreclosure crisis or another big ramp up in short sales. Now, these questions make sense because to a lot of people, the market right now looks a lot like it did in 2006, 2007, and then 2008, which is when we kind of went over the cliff into the Great Recession. Specifically, these questions are based on a few things. First, the real estate market has been very strong and moving pretty fast since 2012 when we came out of the recession. 8 years of strong growth suggests that perhaps we're due for a correction to some people. Secondly, the market's been especially crazy the last couple of years, up to and including the 9 months that we've been in this sort of COVID economy and COVID lifestyle. And then thirdly, there's been a lot of houses or a lot of homeowners who have chosen to take advantage of mortgage forbearance. Now, mortgage forbearance, if you're not familiar with it, is an opportunity to not pay the mortgage if you can show that you've had a loss of income or loss of employment due to the COVID outbreak and restrictions put on businesses during that time. The concern is that there's a lot of homeowners who have gone into forbearance and that eventually that forbearance option is going to run out. And when it does, what are homeowners going to do? The concern is they're going to get their houses foreclosed on or have to sell it at a short sale price, meaning they can't pay off the lender everything they owe. This is something that we saw from 2008 to 2011, and people are worried it's about to happen again. So let's take a look at why it doesn't appear that's going to be the case, and why, in fact, one leading expert on the subject recently said the chances of why they said the chance of another foreclosure crisis is about 0. And if you're not good at math, 0 is a good percent if you're talking likelihood of a crisis. So first, let's take a look at the number of homes across the country that have been in forbearance. As you can see, in May, we peaked out at nearly 5 million homes, about 4.76 million to be roughly exact. Since that time, we've seen a pretty typical and continuing decrease in the number of people in this situation. Now, this is a combination of a few things. Some jobs have come back. People have gotten more comfortable that they are going to be safe in their jobs if they never lost them to begin with. And mortgages are still being paid, or there have been solutions that people have come up with their lender, which we'll talk about here in a minute. But the number of homes in active forbearance has decreased pretty significantly since May. And by early to mid-October, we were under the 3 million mark and have been there all but, say, 1 week by the end of November. The latest numbers for the last week of November, the week of Thanksgiving or so, we were just under 2.8 million homes in forbearance, not foreclosure, just under 2.8 million homes utilizing the active forbearance. So the number has gone down. That's a good sign. We don't want more people than necessary in a situation where the forbearance looks attractive. So first thing to note, that number has gotten smaller. Now, 2.8 million is still a large number, but that's across the country. Keep that in mind. The other reason for optimism with this number is the status of the people who are actually in forbearance. Now, there's a lot of text, a lot of words here on the chart, but the big thing to notice is the green section, because the green section makes up nearly 55% of the people who are active in forbearance or who have an active forbearance going on their mortgage right now. And this group currently has paid their mortgage in full. Whether they were never behind, or they were behind but they've caught up, or, lucky them, they've managed to just pay their mortgage off in total. So 55% of the people who said, I need a mortgage forbearance, currently are caught up in their mortgage. That's a big deal. This is a little bit like having a credit card, right? The fact that I have a credit card doesn't mean I'm in trouble. It means I have credit available in case I need it. For 55% of the people utilizing the mortgage forbearance, it's still an option that's available to them should they need it, but they don't because they're current on their mortgage. That's extremely important. Second group we want to take a look at is the group in blue. Now the group in blue makes up just over 30%, or roughly 1 out of 3, and they are ones who have worked out some sort of repayment plan with their lender so far. Whether that's some sort of loan deferral, where those missed payments maybe can be pushed back a certain period of time, or some sort of loan modification. That could be in the form of a refinance, a way to drop their payment, or get some sort of repayment plan that makes it a little easier in the short term. There's a variety of options available, which we'll get into here in a minute as well. But again, 55% are current on their mortgage, and another 30% have made plans with their lender on how to address the issue. Now, of course, we still have concern about the group in red. Now, the group in red makes up about 15%, not of the country, but 15% of those with an active forbearance at this time. This 15% is still in trouble. Now, I don't want to suggest that we should be really happy because it's such a small number. Of course, this is still an important time and a stressful time for these folks. But to be clear, it's only about 15% of those in forbearance that either have no loss mitigation plan or are in some sort of short sale or a deed in lieu of foreclosure. 15% is the group we really still have to be concerned about. And again, that's not an irrelevant number, especially since these are real people, not just numbers in a pie chart. But when we look at the big picture of how many people have had to go into forbearance, it's a relatively small number who don't yet have a plan in place to take care of it. As Lawrence Yun, who's a chief economist with the National Association of Realtors, recently said, any foreclosure increases will likely be quickly absorbed by the market. It will not lead to any price declines. So for those who are concerned about whether or not the market's going to be hurt by the end of the forbearance period and the risk that a bunch of houses are going to come on the market, either because people have to sell to get out because they can't afford to stay, they're staving off a foreclosure, they're facing a short sale, or they're facing foreclosure, there's a few reasons to be optimistic there as well. Now, the first reason is that most homeowners have substantial equity. In fact, roughly 60% of homeowners in the country have 60% equity in their house. What that means is that for most homeowners, if they had to put the house on the market tomorrow to sell it because they couldn't afford to stay, the vast majority of homeowners in the country have enough equity that they can pay off the lender, pay off whatever fees they have without hurting anything. That's good news. When we entered this situation in 2008, it was different. A lot of homeowners didn't have equity in the house because either they had just bought the home, or a lot of people at that time were pulling money out against their house or pulling equity out in the form of cash, and when it came time to sell, they didn't have any equity left over. So we learned from what happened 14 years ago, and now homeowners have a lot more equity. If they have to come to the market, they can afford to sell without going into some sort of short sale. And because the market's as tight as it is, if they had to price it low to get out from under it quickly, the market will correct it and bring the price back up to where it needs to be. So you don't have to worry that your neighbors are going to undersell, which is something that we did see happening during the recession. In fact, when we look back at 2008, something that we see is that by the time the tide had started to turn, we already had a pretty decent to high inventory of homes for sale before this foreclosure short sale crisis began. In fact, we had about 3.8 million homes for sale in the country, whereas now we have about 1.5 to 1.7 million, meaning there's just far fewer homes to purchase. So there's a little room to absorb some of these should people have to sell quickly, should there be foreclosures or short sales. And let's be clear, there will be some, but there just won't be a lot, especially in comparison to what we saw last time. Third reason for optimism is that prices have been continuing to go up, and there's really no end in sight to that. Now, they should start to level off a little bit more because we can't stay at the pace we've been at. Across the country, price appreciation has been somewhere between 7 and 8%, depending on how you measure. Here in the Portland area, over the last 12 months, the median price has gone up 10%. That's not sustainable. It won't last forever. But it's been driven by a shortage of homes for sale, whereas 14 years ago, a lot of this was driven by people getting loans that maybe they shouldn't have had. And so we don't see the same characteristics coming through. We don't have people taking on a greater debt load than they should. We don't have lenders writing loans without proof of income. So again, this just isn't comparable to what we saw 14 years ago. Now, the last reason that's a little less tangible and a little less data-driven is that once things started to shift 14 years ago and prices started to drop, a lot of people began saying, well, gosh, I owe $400,000 on a house that's now worth $350,000. Why am I going to keep making payments on this? So we saw a lot of what's called strategic foreclosure or strategic short sale, meaning I'm going to get rid of my house or let it be foreclosed on because I don't want to pay for something that isn't worth what I owe on it. And so it was a bit of a snowball effect, right? As people see this happening, they start to add to it. Now, there were many people who got caught in bad situations. That's how they wound up in a short sale or a foreclosure 14 years ago. I'm not just blaming the victim. But there were also a number of people who voluntarily decided to put their house up for sale at a loss or let it get foreclosed on because they didn't want to make payments on something where the price was going down. With the markets the way that they've been here in the Portland area and across the country, that's simply not the case now. We're not going to see people decide to just let their house go into foreclosure because it doesn't make any financial sense. Last, actually, let me add one more point. The percentage of homes purchased each year by investors is considerably lower than it was 12 years ago, in part because investors have to show a lot more strength to make investment purchases today than they did 12 to 14 years ago. Now, the reason that that's relevant is that when investors started to see their assets not paying off 12 to 14 years ago, they were among the first to decide that maybe a short sale or a foreclosure was in their strategic interest, or as rents started to drop and rents weren't covering the mortgage, there was a double whammy. Think about it. If you're getting $1,000 a month in rent, but you have a $1,400 mortgage and the house is worth less than you paid for it, that sucks. Now, that's the risk of investment in anything, but we did see more investors 12 to 14 years ago start to say, I'll just sell at a loss or let it get foreclosed on because I'm purely in this for the investment and I'd rather cut my losses. Again, we have fewer investors in the market right now, and those that we do are doing well. The homes are performing well. There's no reason for them to jump ship. So thanks again for tuning in. That's a brief look at why we don't expect to see a big jump in foreclosures here in the Portland area, or really across the country, or a big jump in short sales. Now, I want to be clear. It will happen, of course. We've not gotten rid of foreclosures and short sales, even when the market's been hot. The numbers never get down to zero. But as of the end of November, short sales and foreclosures made up less than 1% of home sales across the area. That number is going to get a little bit bigger, but it's not going to become substantial. And because we have such a shortage of homes available for sale or to purchase, if we see a bit of an uptick in those, we have plenty of room to absorb it and still maintain a very healthy, profitable, price increasing marketplace. So this isn't something that we should be too worried about. Keep that in mind if you're out looking for a home or you're out for a walk in your neighborhood and you see a foreclosure. What will be easy to have happen is to think, nope, I just saw one come up in my neighborhood, here it goes again. In fact, I belong to a few real estate groups on social media, and I've seen agents from around the country say, oh, crap, here we go again, there's a short sale on my block. And it's important to remember, seeing it happen a couple of times is not the sign that a tidal wave is coming. Thanks again for tuning in. If you have any questions at all about where we sit, if you have any questions about your own equity position, let me know on that as well. And then lastly, if you or someone you know are in a position where you're having a hard time making the mortgage payment for any reason, reach out and let me know and we can talk about some of your options. Specifically, if it's COVID related, we can talk about what your forbearance options should be. And please tune in with us next time where we're going to go over the steps you should take if you're having a hard time with your mortgage payment as a result of COVID and changes in employment and income. We look forward to talking to you again soon. Have a great day.